All right, welcome back to the Big Skinny. It's time now to really level up our just understanding of the biotech sector, how you, if you've never invested in this space, can get started. I'll tell you, I'll confess, I've made some of the biggest gains in my career in this space. And I started out as a tech guy and then backed into the science and understanding. And that is exactly the trajectory of our guest of today's show, Jonathan Faison, who's a veteran now of the biotech sector of 15 years running. Welcome, my friend. How you doing?
Doing great. Thanks for having me, Lou.
Listen, we got a question already from the audience, and I know you're just like me. We love to just jump right into it, so let's do it. So this is coming from Steven. What's your approach to commercial biotech companies versus clinical stage? Ooh, great question here, because I think you do have a different approach to this.
Oh, sure. I like the imagery. There's a movie, Pistol Pete, where the basketball coach holds a ball and he says, "This ball represents what you know, or the whole of the knowledge of basketball." And then he points to one point on it and says, "This is what you know." And that's how I feel about biotech. I'm very aware as a retail investor what I know and what I don't. And so most of the portfolio is commercial stage biotech. So what's nice with those companies is you're not worried as much about FDA risk because they're already approved drugs. And so you're looking more at sales growth over the next few years. That's going to drive the stock price, as well as pipeline momentum. In general, and again, this is just for my portfolio personally, I have a maximum allowed portfolio weighting rule. So for clinical stage biotech, it's just 5% of the portfolio maximum for each position. But for commercial stage, it can be up to 10%.
And then
And
is
again,
that
that's
as
just
like
all about
a starter position, or do you let them grow from there? How do you handle?
they're allowed to grow from there. Exactly. If the share price increases, obviously the amount of the portfolio can as well. But again, the idea is, I love how you said, stay humble or the markets will humble you. And I learned the hard way in biotech, what I call these gut punches, where you'll wake up in the morning and a stock that you thought was going to do very well loses 90% of its value because a study tanks.
Yeah.
And so how do you manage that risk?
Yeah, no, look, we saw an example of that today, right? NVIDIA RNA is up 42%, and then Intelia NTLA down 42% on an adverse reaction in I think it was a liver, correct? Right? It was
Liver, correct.
Yeah. Yeah. So look, it can humble you quickly. So position size, you had a great tweet before too, is that you basically, the key is, well, actually, this wasn't you, but your story has this guy, Matt Gray, that I found is you got to start somewhere, essentially. You don't need to be an expert, and you're living this out. So how did your strategy come out of this, right? So where did you come up with the 5 and 10% portfolio limits? What are the things where you could shorten that learning curve for someone that's listening today that's never invested in biotech? What's the one thing you would say, aside from position sizing, that's most important?
Oh, that's a huge question. And I wish so much somebody had asked me that or told me that when I was, starting out at age 22. First thing I did was invested my life savings and lost half of it during the
Mm.
financial crisis. Thought I was a genius, took out a big loan and lost most of that. And I had to learn everything the hard way. And the number one thing is community, whether you build that on X with the people you follow, whether like with us, ROTY Biotech community, we have about 500 investors and traders of different strategies. But wherever you find it, surround yourself by smarter people, those with different approaches, especially if they've been in the markets a lot longer than you. I like to say that nothing that I have in my system is original. It's just taken from people smarter than myself. Even the tier system, having a tiered strategy, 4 different tiers of position weightings from 10% of the portfolio to 7.5 to 5 to 2.5. There's a guy in our chat named Mike who used to manage a hedge fund, and he was telling me how he used tiers. And that's kind of where one and one clicked, where I realized, oh, that would really help me to make sure I don't rush into positions, that I'm constantly weighing risk reward. There was another analyst who taught me what he calls portfolio cage match system, where he takes a stock he owns and another stock on radar that he might like, and he puts them in a cage match against each other and asks him, which one has better risk reward, which one has higher upside, which one has a better balance sheet, better management team. And so each thing in the system is part of a larger whole learned from other people.
Yeah, no, look, I love the community aspect. We were talking before you started the show too, that one of your community members is someone that's in my community from different crosses of life, ER Capital, who is a great early stage microcap investor. And look, I think that's what's different. And this is what I love about you two. You share your wins, your losses, your learnings, your hard lessons, the good lessons. Nowadays on X, I see people, and this is my pet peeve, where they're just tweeting out their portfolio size. And it's like, that's not value added content. Give me something that you learned the hard way, or share an insight, because everyone's learning, especially this community is very tight knit. Wanted to talk to you about, because it is, you've basically got a real-time survey of sentiment from your 500 community members, right? What do you see as the sentiment change in biotech right now? And why do you think that this rally might have some staying power compared to what we've seen, in the recent 3-4 years on every fake out rally?
Sure. That's a great question. And I think I shared in an X post recently, it was only a few years ago where many biotech investors wanted to throw in the towel because of how difficult it was out there. We had what we call the thinning of the herd, where a lot of weaker companies were eventually running out of cash, reverse mergers, or going bankrupt. As you said, with IPOs, at the 2021 peak, the problem was a lot of science projects were coming to the market. Personally, I'm not allowed to invest in science projects, where companies come up with a platform technology and they're throwing it at the wall at different indications and hoping something will stick. For us, when we invest, there has to be a clear path to market, clear differentiation versus other available drugs or peers. And so you're seeing this confluence of positive factors, all these negativity from the past few years is flipping, and now we're seeing M&A activity coming back. It's already at a higher level than last year, still under 2023, but it's getting there. RNA avidity today, as you said, with Novartis, and it's so you're seeing the M&A activity going up. There's a lot of license deals going on. There's a very friendly FDA right now with the regulatory flexibility. The most recent example was Replimune, who has their oncolytic immunotherapy that got a thumbs down for a second time, I think, from the FDA. And they came back around because there was so much pressure from the melanoma doctors who said after PD-1 immunotherapy, these patients don't have many other options except for clinical trials, and from the patients themselves. And so the FDA flipped and assigned them I believe it's a June PDUFA date or January PDUFA date. Anyway, so it's nice that they're getting a second shot, and most likely will be approved this time around. We're already seeing that flexibility with rare disease companies as well. And so that's really nice, refreshing from an investor standpoint to feel like you have headwinds instead of swimming upstream for a change.
Yeah, no, I completely agree with you. A very just pro-approval FDA. It's funny. Do you ever think? I mean, and I know we'll get questions. My partner here comes on to ask questions later of terminology he doesn't understand. But if you teleported back to 15 years ago, did you think you'd be saying PD-1 inhibitor, immunotherapy? Let's see. We probably go CD4 cells and Tregs. And how did you get over? Because I think that's the most intimidating thing for new investors. Just the nomenclature, right? The abbreviations. How did you get up to speed so quickly on the different mechanisms and different terminology?
Well, that's a great question. I like to say up to speed is relative. There's still a lot I don't understand, not having the background there. I like to say that if I'm able to explain the thesis, the reason to invest to my 10-year-old nephew in an easy way that he can understand, that means I'm allowed to invest in it. The guys in our chat are smart. The people on X are smart, all the scientists, et cetera, who follow. And they can tell pretty quickly if you're trying to pretend to be something you're not. So if you're reading all of these clinical studies, if you're reading the opinions out there, contrasting them with your own research, listening to the management presentations, there's Jose Reston, who also, he's Peruvian Swiss investor in our chat. And RNA that was bought out this morning was his largest position, 23% of his portfolio before the buyout.
Round of applause for Jose, man. That's a big win today.
And he's racked up 5 buyouts this year. 40% of his portfolio has gotten bought out this year. But what I like about him is, like you said, he just stays humble. He shares why he invests in each company for the long term. He's all about downside risk management. And that's what I love about the community is people are sharing their ideas. They're not trying to pretend to be something they're not. And he spelled the risks out ahead of time. Avidity, who got bought out today, it wasn't long ago. They were in single-digit stock price. They had some pretty bad adverse events. It was like basically cerebral hemorrhage, whatever. And so that's one that I steer clear of personally, because I did not understand what was the chance of that adverse event happening again.
Right.
So you have to know what you own, and be very honest with yourself what you don't know.
Yeah. So look, I think you put a finger on it. It's immersion, right? Just immerse yourself in the language of the sector, start reading, interacting, and you'll pick up the terminology and get an understanding just like you would if you're learning a new language. It's the fastest way. You keep mentioning community, and we've got a lot of people here asking questions, so let's get right to it. Chad, would Jonathan recommend one of your previous ADMA biologics? Don't know if you ever looked at that before. That is more in the transfusion space outside of XBI. What would your top 5 names and symbols? That's a big ask since he runs a subscription, but I know you got at least one name you can share with us that's high conviction.
I'm happy to share tops. But first, with your question, ADMA, that's not one I personally follow. I've done some due diligence on it. Mike from New Zealand, who's a hedge fund trader in our chat, that's actually his top position. And he likes it for similar reasons. As a cash cow, he thinks it's a target for a leveraged buyout. Personally, I like to say that buyouts are icing on the cake. They're never the center of my thesis. If they happen, it's amazing. Strategic value to acquirer is one of the main selection criteria we use. Also having a long IP runway, patent life. Yeah. But it's nice if it happens. But it is a nice cash cow, and I did see that management's, there's been a lot of insider buying.
Look, I met with those guys maybe 5 or 6 years ago, management team, and they laid out the path that they were going to go on, and they absolutely executed against it. So full disclosure, I don't own it anymore. I wish I held on to it. I took a small profit instead of hanging on with conviction for the long-term game. But what are some of your top names now, and what are the indications that they have approvals in? What stage are they at?
Oh, I love it. I like to, like you said, it's all about value add for the people listening to us. So the most timely name that I would talk about would be Syndax, pharmaceutical symbol SNDX, currently around a $1.1 billion market cap. The cash on hand is around 500 million. And what's interesting here is they gapped down on the approval of their leukemia drug Revuforj, which is the first menin inhibitor approved. It's already approved for KMT2A rearrangements, which is 5 to 10% of AML, and it just got approved for NPM1. So the two of those combined end up being around 50% of AML cases. And the gap down is due to some safety concerns that aren't new to my eyes. But before they had QTC prolongation, which is on the label, and then they've had differentiation syndrome, you name it. But people forget the context of these drugs in the relapse refractory setting, especially these mutations. It's, in KMT2A, these patients have 3 months of overall survival. So you're able to give them, with no drugs approved, give them an option that gives them about a 50% chance of a response. From there, going on to a chance of a curative transplant. And of course, the docs are going to take that. And this year, when they originally launched the drug, they thought patients would be on the drug maybe 3 to 6 months top. And now the management has come out and said that treatment duration is going to increase to 6 to 12 months as they treat earlier and earlier line of patients. Before, the transplant rate was around 15%, meaning 15% of those patients go on to transplant. And now it's looking like a third of them will, a much higher number as they treat earlier line. And so now it's approved for NPM1, and people are concerned about competition. There's Kura Oncology, KURA, which I recently sold for about a 50% profit, still a great company. And they have a second menin inhibitor that could be coming to market with its PDUFA date, the 30th, 31st, a much cleaner safety profile. But my caveat there is some of their single agent data is, from what I've seen in the press releases and such, is missing. They tout the combination profile for earlier line AML. But when I compare, it's cross-trial comparisons, so you have to be very, with those caveats, it's not head-to-head. Right. But it looks to me like Syndax has a more efficacious drug. They're already in NCCN guidelines. So when these AML doctors are looking up the treatment protocol, this is where they'll go. They're already familiar with the drug Revuforj. And so even if maybe the Q3, if scripts go flat in the KMT2A launch, that first small segment, my bet is that in 2026, scripts will start accelerating again as they launch into that second indication. And a really fun part here is one thing that's not included in analyst models, I believe. is after a patient goes on to curative transplant. Remember, we said about a third of patients do that. I saw a doctor survey that between 80 and 90% of doctors plan to put their patients back on Revuforj in the maintenance setting as well.
So that'd be a maintenance setting kind of indefinitely as administering it instead. So you talked originally 3 to 6 months. Now this would have a, and then expanding to 6 to 12, this could be 12 plus at that point, and that's a revenue stream.
Well, exactly. And what's also fun here is they have a second drug called Niktimvo, which was approved in the third line plus graft versus host disease. The comparator is Rezurock, which in its third year did annualizing 500 million of sales. And Niktimvo is already on pace to either equate that or pass it. And 50% rights are owned by Incyte. And so that larger partner, Incyte, you would think at some point will want to buy out the full rights. So again, it's just a really nice sum of the parts story. It kind of mirrors my approach, where I want to be in situations where heads I could win big, and tails the loss is manageable. Full transparency, the stock price is around $13 now, and my cost average is $9. So I don't want to not disclose that.
Yeah, no, look, I think it's important. You bring on a couple things. One, I think, and correct me if I'm wrong here, or if this is characteristic of a lot of other your picks, you're focusing on a company that, one's got approved drugs, so you get rid of the FDA risk. They're scaling into markets that have the standard of care treatments, or the life expectancy is not very encouraging. So there, even if you can show a little bit of a benefit, you're more likely to scale into the markets with sales, because look, I mean, all of us face this, right? If you had, you're in the unfortunate position of 3 to 6 months to live, and someone said we could double that, you're going to absolutely try that if you know it could be safe. Do you tend to see that you're focused on investments that are in those types of situations where there's not many other approved drugs that are working, and/or there's recurrence, and that you need some, they don't have any other options?
Exactly. That's the, I think it was Warren Buffett who said, and obviously he had nothing to do with biotech and risk, that would be too much for him. But he said having those hurdles, step over something as small as possible. And that's what we try to find in biotech too, maybe indications where there's nothing approved or very few options. Because the converse is true in biotech, that in oncology, for example, there's many indications where there's so many approved drugs. The treatment algorithms are so complicated that it's very difficult as an investor. Like non-small cell lung cancer, they're looking at what targeted actionable targets are there, what mutations do the patients have, will immunotherapy be an option, or chemo? It's just, there's so many variables out there that we try to focus on those indications where it's a lot more obvious.
So Chad's admittedly getting greedy here. You shared one good one, SNDX, for anyone tuning right in. He wants another one from you. Chad, just buy the XBI, it'll all be good. Now, what else do you like at these levels here?
Well, I love what you said about the XBI, and I'd be remiss that I like to tell people in chat, like, if you're trying to tiptoe into biotech and you're mainly doing XBI, but you want to have some fun in a disciplined manner, maybe your main biotech exposure is XBI, and you own a handful of individual companies. So that way because sometimes the best way to learn is by doing it yourself, but that way you're doing it in a risk-adjusted manner. And if you do well, great. And if not, you're going to live to fight another day. Right.
So do you find yourself, do you have cash holding, or do you just put it in XBI since you're all in on biotech, and that kind of serves as your cash?
For me, it's all our holdings. So I'm allowed to hold between 10 and 15 names positions at any given time. I've personally found that's my sweet spot. Back in the day, I tried to run 2 portfolios at the same time, and that's just diversification. You're spread too thin. And so, I try to focus just on what I know well. I like to say that I don't have many really good ideas. So when I do, I want to be long them.
Yeah, no, that makes sense. I completely concur. I find, especially in a sector that can get so specific, going over more than 10 positions gets really cumbersome to keep track of if you're doing it all on your own. Another question here. So Gain Therapeutics, I don't know if you've ever looked at this, but looks like they may have the first disease-modifying drug for Parkinson's. Have you ever looked at this? I'm going to let you answer, but I already know the answer. This is a phase 1 going into phase 2, so that's a hell no, not yet.
Yeah, I can't say I've heard of it, but I very much appreciate it. Like I said, that's the fun thing about chat, whether on X or wherever you find community, is being able to bounce these ideas off of other people. there's a problem on X. I think a lot of people, there's some accounts that tend to block if somebody disagrees with you. And I say the opposite. I love it when people tear into my ideas, tell me where I'm wrong.
Yeah.
When I started writing on Seeking Alpha, the comments were absolutely brutal. I'd have doctors commenting and being like, you have no idea what you're talking about, but that's how you get better.
No, I agree. And that's why I told people early on to read Adam Furstein over at Stat News, because he tends to be the most skeptical because he's been around for a while and read it all. And, you know, he goes after people, attacks them, attacks companies. In fact, I pulled up a ticker in preparation for this episode. I don't know if you ever looked at it, Northwest Biotherapeutics, NWBO, yes, that I've met with Linda, the CEO, back in 2009. And I mean, that feels like an eternity ago. I don't know how this thing's still around, but there is a rabid fan base, loyal fan base for a lot of these early stage ones that sometimes, as long as it's civil discourse, I think it's helpful. Gain, though, I would say is, here's the difference between you and I. I like the earlier stage that could be disease modifying companies that might not even get a chance to get approval, just because I don't focus exclusively on this. I think my diversification and risk management is by holding a handful of biotechs and then other names that are much less risky. Sure. So I guess, how many times have you had a buyout happen for these companies that you've been involved with? I mean, let me ask this a different way. At what market cap are you typically getting invested? Because I think that is helpful to people to understand, okay, I should wait until you're over a $500 million market cap or $1 billion market cap before considering it. Well,
the absolute minimum we're allowed to invest in, and it doesn't happen much, but is 100 million. Okay. Lower than that, no. I'd say on average between, that 500 million and 2 billion sweet spot. What you were talking about, risk management, especially these earlier stage companies. And I think a tweet I shared, a post on Jose Reston, who had the big win in RNA today. And what I loved is that he focused the attention not on his win, but on the risk management, saying that his first thing he looks at is downside cushion and what would he lose in the worst case scenario. And I like to think of that as winning by not losing. And so
amen.
People who want to get into biotech, I'd say that's the first thing is, first you estimate downside cushion, but also be aware that you could be wrong. So in the worst case, if it's 2% of your portfolio or 5% of your portfolio, ask yourself, if you woke up to the unlikely gut punch landmine that you lost 90% of your capital, how would you feel?
Yeah. No, I think it's instructive too, especially in this market where everyone's talking about all their winnings in AI and crypto. And then, a couple of weeks ago on Friday, we saw those people get obliterated as the altcoins got blown up. That's happened in biotech before. You want to avoid that. Question for you. Do you use or any, you talked about Warren Buffett earlier, doesn't invest in biotech, but are there any institutional investors that you follow for potential idea generation where you see them get involved and you say, oh, maybe that's a name I should take a look at?
I like to say that those funds, it is fun to follow the filings they have, but it's just one of many, many indicators. You have to remember that many of these funds, whether they're $1 billion or $10 billion in size, so you could read in an SEC filing that they own 10% of a very small biotech company. And for you, you're thinking, wow, they own 10% of them. This must be going to the moon. But remember, for them, that might only be 0.5 or 1% of their portfolio. So they know what they're risking. If this is a 10 bagger, great, they do well.
Right.
And if it implodes, they're going to live and fight another day. So make sure you take that into consideration.
Yeah, context matters. So I'm going to put you in the context of part of the interruption. We've got a few rapid fire ticker symbols here. I'll take some of them if I know them as well. So that's not you just in the firing line here, but we'll let the guys at the studio pull them up. If you know them and you have any opinions or you just want to say pass or abstain, it's all you. Processa Pharmaceuticals. This is an earlier stage one for me that's turned into a crypto treasury company. I know I saw Patrick Lynn at LD Micro. That's a pass in the context of biotech. They're not commercializing anything biotech now. They've turned into crypto. And it's way too early for Jonathan, so I saved you on that one. You got the next one.
All right.
How about SANA? Are you on board?
Well, interesting you mentioned that. Dr. Stephen Vig, who's actually, I saw one of his questions earlier from you. He's watching us. In our chat, he shared about this potentially curative therapy for diabetes. And as you know, it's too early stage for me, but him and a number of other guys in chat really like it. The initial results, it looks like they're solving for
type 2 or type 1?
That's a good question. I can't say I've done the
So I'm
due
intrigued
diligence there.
now, doctor, because I was involved in Prevention Bio, which had the first disease modifying drug for type 1 diabetes that got
Okay.
approved and then bought out by Sanofi. So stay tuned, tune in. I will take a look at this one and see what I think.
We have
Maybe
a
it fits the bill.
YouTube segment where Dr. Vig also explained the mechanism and how it works too. So that should help you get up to speed.
That's awesome. Okay, next one, LCTX, Violator 2020. Back with this one.
Lineage cell.
I don't know this one.
I
Do you know
remember it off the top of my head, but not.
$400 million market cap. So it hits on those levels. I'll have to dig in. We'll have to do
It's the
some more.
GA market, I remember, which was quite big, but otherwise, I see that 36-month data. I know in GA, there's already 2 approved drugs that are suboptimal, but again, not familiar with this one.
All right. Do we have any more tickers to challenge us with? Koya
If not, I can.
Therapeutics.
Oh,
I'm going to tell. Look, stay tuned. I know Koya well. Could be talking about it here in the future, but it's too early for Jonathan. We're saving. Look, I want to give you a chance because they're throwing all these ones at you.
Sure.
We definitely have some speculators in our midst because they like their early stage early clinical. I wanted you to give you a moment to talk about, because your community, the ROTY community,
Sure.
and what a subscription entails, because I've already heard things like a 500 member community that's really proactive about sharing information and intelligence that includes everyday investors as well as doctors and clinicians. You talked about YouTube content where you're doing interviews and sharing stuff. Why don't you tell me why I shouldn't sign up? Because for me, one single winner in biotech from you would more than pay for the subscription fee.
Hey, I appreciate it. I like to say that, as investors, one of the very few things you can control is the costs that you pay for your services, tools, et cetera. And you want to keep those costs as low as possible so that, that's not eating into your account. So it really has to be getting the most bang for your buck, whether it's charting services or news or biotech, you name it, another person's portfolio, chat. So what I like about our service is there's a 2-week free trial. I always tell people to, kick the tires, copy anything that helps you. I have all my winners and losers, what I learned the hard way, the portfolio, the thesis for each company. Each weekend I publish a recap, a summary, including 5 names that I think are buyable or actionable right now. And so, only stay if it adds enough value for you. And if not, hopefully you take away something that helps you.
Look, I'm going to strongly encourage people to sign up for your service. I'm going to sign up today because I've realized how much you know. I've seen it, the value you add. You're very giving. And also, I would tell you, you don't charge enough. If I looked properly at what was the subscription price, I used to run a subscription service that was much more expensive, and we did not deliver as much value as you clearly have. What's the best web-based way to subscribe coming in from Chad Towers? They can find you at Seeking Alpha, right? That's where you run your subscription from?
At Seeking Alpha, you can do it whether on your normal computer or on your mobile. They have an app, etc. Somebody's posting there.
Yeah, it's Chad saying SANA was an Eric Jackson pick, so we'll have to dig into that some more.
If he wants another idea, I can throw another out there because they were asking for it.
All right, go for it, man. You got it. We're gonna end with a bang, and this is a third pick from you, so you're delivering more value than expected.
Okay, Replimune, REPL. If you look at the stock chart, it's currently at $9. We just bought it at $8. And this is the company that the FDA just accepted their BLA resubmission. April 10th is the approval date. So I do caution people that it is a clinical stage company, but it is trading at around half of conservative peak sales for the lead indication in melanoma. And that's been my sweet spot in the portfolio, is buying companies when they're trading at enterprise value of 1 or less than 1 times the conservative peak sales. And then as a call option, you're getting expansion from there into other types of skin cancer, other solid tumors. But first things first, they need to get approved in this beachhead indication. This is a revaluation idea. So as we get closer to that PDUFA date in April, you would expect the share price to run up some. If it runs to mid-teens, that would be a good time to take at least partial profits off the table, and then you could hold some into, in my case, it's a multi-year time frame. I'm looking at approval, sales growth, but each to his own, depending on how you want to manage the trade. But I feel like it's in the early stages of a revaluation upward.
Listen, man, I can't thank you enough. Nothing but a value add perspective, also specifics. Would love to have you come back on on the show in the future to share more with us, Jonathan. Thank you again.
Appreciate it.